Hello and welcome, or welcome back. I forgot I'm saying the thing with the fashion corner. Right. Hello and welcome or welcome back to my little fashion corner. This video is all about me reading through the financials end of 2024 or whatever is available end of April 2025. Lots of companies have been steadily announcing declines in their income, which then sparked interest on my end, and one of these financial announcements actually instigated the departure of Salvatore Sarno from Gucci. We'll talk about that later. And then Versace's acquisition by Prada Group. Major warning. That sidetracked me significantly into an accidental rant covering Mr. Idol and Mr. Kors, Michael Kors, which will now probably dominate this entire video. But I've got myself to blame. I was interested in the first place. Then I'll also wrap up this video with some fashion musical chairs, which there's a little bit of a short. Alright, let's get into it. First up, the financials. In terms of housekeeping, and just to make myself clear, I'll be talking about revenue and profit. Pretty certain you're well versed and know what these mean, but my brain really needs me to tell you. Revenue will represent total income from sales during the set time before any expenses are deducted. In contrast to that, profit is money that is left after all expenses are subtracted from the revenue. Right, brain feels a lot better now. So some of the results are reported for a group, which is totally fine. When it comes to group reporting, it can get kind of confusing as they report group results and the group within group results, which they are publicly traded as a group, so they don't have to really break it all down. Specifically, LVMH has 78 brands in their portfolio and a number of companies set up within that group, including a few of those that provide guidance and services to those companies within that portfolio, like the LVMH Services company in the UK that has a lord on their directors board that actively serves as a private secretary for foreign affairs to the Prime Minister. But I guess working with Mark Thatcher sets you up for success, because dude sat or sits on boards of many prominent British companies and many of them supplying to the British government. Anyway, I wanted to escape from the global politics and everything that is happening in the world, so that can stay in the corner. Since I already opened the can of worms, let's just continue with my least favorite group, LVMH. LVMH reported 2% decline in revenue in 2024. They still made over 12 billion euro, which is more than 10 million pounds sterling or over 13 billion US dollars. Whilst only 2% decline in revenue, they reported 17% decline in profit. In general, that means the costs to produce the sale are increasingly higher. What jumps to mind can be cost of materials, maintenance, electricity, etc., higher labor expenses, or if a company spends a tidy sum to contract influencers to increase sales in a perceivably profitable markets, and then the population worried about paying for silly bits like food doesn't rock up to buy the high margin goods that they were meant to buy. The accounting reflects a higher decline in profit than income. LVMH groups many fashion brands into their fashion and leather goods division, which includes Louis Vuitton and Dior, and that group reported 3% decline year on year, meaning this time last year. They cite declines in key markets. I'm not sure if that's crazy rich Europeans, Asians, Americans, or who. Actually, Research Linda then found the market decline breakdown. Asia down by 11%, US down 3%, Europe is up by 2%. Australia didn't even make the cut, we're not real. LVMH is also citing tariffs and economic uncertainty. Tariffs are a new thing to them, okay? Citing economic uncertainty, it must be nice. So these results reflected 2024, which looks like their fiscal year aligns to the calendar year. Now, the first quarter of 2025 hasn't been much kinder to LVMH. Another 5% decline of that fashion and leather goods group, and 3% decline in overall sales, which is really, really bad because analysts predicted a 2% growth for them for whatever reason. So this is really not looking great for them. Whether that is the tariffs, uncertainty, or people just being tired of the weeds level of growing prices, it's bad news all over. What made news alongside LVMH's decline was quiet luxury TikTok's favorite, Hermes. They surpassed LVMH in market capitalization. That means, again, I don't mean to patronize, it's just this thing. I like to be on the same page. That means that LVMH's shares continue to decline alongside their financials, bringing the overall company value down to 246 billion euro, whereas Hermes is now above them at 247 billion of its market cap. Now, the stock market is just like David Schitt's sexuality, fluid. It might go up, it might go down. However, the long-term trends affect investors thinking about these companies, so-called sentiment, which then directly affects the intention to buy. And it is my opinion that LVMH is in for a bumpy ride. Watch them bring out more of these noughties and 90s reruns to try and further capitalize on millennials. Like we don't have enough on our plates already. Hermes. Right. The Hermes family still owns more than 60% of the business, and they have recently announced their commitment to keep it that way long term. Just for reference, LVMH has also shared there, and there are periodical rumors speculating about a takeover. But again, the family doesn't seem to be keen on that at all. Hermes reported 15.2 billion euro in revenue in 2024, which is an impressive 15% growth, and 6.2 billion euro of operating income, which made almost 41% of sales. All right, Kering Group. That is a lot smaller group than LVMH, but we're still in billions. Overall, 2024 reported revenue was 12.8 billion euro, 11 billion pounds sterling, or 14.5 billion US dollars, which was a 12% decline year on year. Sadly, Gucci got the worst of it. Gucci announced 26% decline in revenue year on year, third quarter of 2024, particularly in Asia Pacific region. Its operating income at 1.6 billion euro. Gucci being Kering's flagship, it had significant effect on their 12% decline overall. How very unfortunate for Gucci, and more importantly for me, because Sabato De Sarno was removed as a creative director following these disappointing results. Which is a shame. It wasn't a 10 out of 10 for me, but I liked it a lot more than what Alessandro Michel produced. And Michele's Gucci was extremely oversaturated with influencers and online. Saint Laurent or Bottega Veneta also falling into Kering's. Saint Laurent was at 9% decline, netting 583 million euro profit, and Bottega Veneta was up 4%, bringing in 121 million euro. Prada Group. Prada, Miu Miu, Church's, Car Shoe, Marchesi, Luna Rossa, and their newest sibling, Versace. With results reporting happening prior to this agreement in mind, let's have a look at this lot. Prada is absolutely on it, man, shaming me into continuing all that Prada video from literal years ago. But they put Kendall Jenner in an advertisement, so we're on a break again. Group announced revenue of 5.4 billion euro in 2024, which is a staggering 17% growth year on year, and net profit growing by 25%. That is insane considering that, A, what's happening in the world, but B, that is all enabled by Miu Miu's sales growing 83% year on year. I don't really like Chanel. I never want to talk about Chanel, but it is deserving to include them. They are part of it and they are doing it very well. Chanel reported 16% year-on-year growth in their 2024 financial results, grossing 19.7 billion US dollars in sales with 6.4 billion net profit. That's really great. And with Virginia Viard leaving, it's probably going to get even better. Valentino. Currently owned by a Qatari royal family through their investment company, by the way, Valentino is doing okay. It's a 2% decline, but that could actually be justified by the economic impact. Burberry is always going through something. Stella McCartney seems to continue to pay off their obligations. The row is on an incline. The carousel never stops turning. So let me move on to the second point of agenda. Prada acquires Versace. That one person, and I'm very grateful, asked me what I'd make of it when the news broke. It's not my vibe. I feel like Versace has been lukewarm, but they are one of the OGs, and now added to the portfolio, the Made in Italy branding is on the rise. Versace's sales revenue fell by 28%, which was a good time to inquire about potential merger and acquisition. Both brands are Italian, strong roots, but ultimately very different. Now, Prada doesn't have the best track record in company acquisition. Alaïa, Jill Sander, Helmut Lang, Fendi. We'll talk about the grand ousting of Donatella 2025 a bit later, but she is still in the company as a brand ambassador, philanthropist, and a red carpet looks designer. And from some articles that I've read, from some interviews I've heard, it seems like she has massive respect for Miuccia. So, girls power? The money talks. And here starts my sidetrack into major drama. Capri Holdings, who sold off Versace, also owns Jimmy Choo and Michael Kors. How did this holding come together? Glad you asked. This is John D. Idle. I didn't care enough to find what the D stands for. Richard? This 67 years young fella started making his name when he held senior positions at Ralph Lauren during 1994 and 1997. You see, he kind of made his name for himself to help company grow through licensing out the name, the brand. So at Ralph Lauren, he helped to create several brands advertising to a number of target audiences, as well as licensing out the brand to a myriad of products. I choose to believe Ralph Lauren became the brand of vacationers and jet setters because of his smart casual designs. So, this licensing business, it sort of becomes a formula. It's a thing I have noticed amongst the middle-aged men in leadership positions. And this is just my opinion as someone who works for corporate America. Find one thing that works and then ram it onto every potential slightly similar situation until it works again. And rather than encourage them to buy, shove the sell down their throats. Ralph Lauren remains an independent, publicly traded company that's been doing really, really well. It's valued at 13.6 billion US dollars market cap, and Ralph celebrated 85th birthday last year. Woohoo! Mr. Idle. So Mr. Idle then moved to Donna Karan, 1997 to 2001. He helped the company to sort out financials, license out the name, prepare a sellout to, you guessed it, LVMH. Whilst he didn't have a stake in the merger, he did walk away with handsome 30 million US dollars compensation package. Factor in inflation, and that's about 24 millions today. Again, back to his formula to license out absolutely everything. Donna Karan New York, Donna Karan New York City, city shoes, jeans, fragrances, watches, beauty, children's, you name it. It's not difficult to ponder where the influx of money then comes from. Fortunately, Mr. Idle remained super chill about the success, saying it wasn't just his leadership. He had help. That's a reflection of not just my leadership and direction, but of the entire team. What a guy. He gets his payday, and now he was branded as the licensing guy in fashion. Although I would still, for my personal interest, like to see the books and how the sellout was prepared. 2003, he made a move and together with Sportswear Holdings, a private equity firm based out of Hong Kong, acquired Michael Kors and moved in as a CEO. Now for context, Michael Kors as a brand wasn't that, it's everywhere presence at the time. They were valued at 20 million, but these investors paid 100 million, presumably to invest into expansion. So let's talk about the context. Michael Kors as a fashion brand was kind of dormant at the time. Kors started his own brand in 1981. He operated out of Bergdorf Goodman, and he tried to expand to smaller boutiques. I found cited both 1990 and 1993 as years Michael Kors files for bankruptcy protection, which then resulted in shutting down his lower tier brand Kors Michael Kors, but kept his Michael Kors collection and however scaled down production significantly. What got him going was a 5 years gig at Celine. That was a major success. For fall 1998, Kors presented his debut collection with Celine, and this really changed the way people saw both Celine and Michael Kors, but considerably boosted Celine's sales. And Celine Dion, no relation to Celine, Dion wore one of his dresses performing My Heart Will Go On at the Oscars. and we made it back again to 2003, getting investors on board and someone to help with that licensing / expansion version 2.0. And so he did. They licensed out almost everything, got the Cheers of brand going again, and really got that Idol formula. Funnily enough, Michael Kors' name became notorious through his engagement as a judge on Project Runway from 2004 to 2012. His personal fame and brand really helped the rapid expansion, then taking the company to IPO in 2011, and suddenly Michael Kors was everywhere, which in my opinion ended up being his or their curse. So both Kors and Idol are laughing. Idol is now a CEO and a chairman, and then Michael Kors Holding, which is now Capri Holding. They expanded into multi-brand by acquiring Jimmy Choo for $1.2 billion US. That was in July 2017. And in my opinion, that they proceeded to absolutely destroy the brand. They removed all emotions, so uniqueness, making it all just cookie cutter, trying to appease to most. Anyway, Capri Holdings then added Versace to the portfolio, acquiring them for $2.1 billion US in September 2018. That was meant to be their transition from establishing new baseline to long-term growth. And it was all onwards and upwards until it really wasn't. And a former employee said, New York Post, "The undoing of Kors was its discounting during a giddy-heady time that lasted around 5 years. Idol was warned multiple times not to discount, according to the employee. He was told, 'You're over-distributed,' but all he could see was the cash register ringing." That's a weird thing to see. Full disclosure, never really followed or liked Michael Kors that much. I kind of stopped liking Jimmy Choo, and Versace just wasn't for me. It really bugged me that Michael Kors was everywhere and that Jimmy Choo just became this no personality brand. The tiered system for all brands, licensing it all out, shoving it down our throats, yet it felt like none of the brands had personality, which is now interesting to reflect on, because according to the New York Post article, dude's got a God complex and is killing off those brands by removing their souls and implementing his trusty formula, which he sees as the absolutely right thing to do and move for their company, in my opinion, of course. Moving right along, Idol's next payday was meant to be this mega deal, selling off the entire Capri Holdings company to the Tapestry. Tapestry also owns Coach and Kate Spade, which have recently really revived their brand and audience and gaining lots of traction and income. However, there were antitrust doubts and the merger made it to the courtroom. The Federal Trade Commission was suing to block this $8.5 billion deal to buy Michael Kors. The FTC said it would eliminate competition. In October 2024, US District Court Judge Jennifer Judge Jennifer sided with FTC and their concerns about this conglomerate no longer sustaining competition between these brands as top US handbags producers. Here's how much John Idol's holding cares about their customers and supporters. Capri Holdings' defense included a statement that handbags are non-essential items whose price consumers can control by not buying them if they become too expensive. That argument ignores that handbags are important to many women, not only to express themselves through fashion, but to aid in their daily lives, the judge said. And all hail to Judge Jennifer. She gets it. She knows what it is like to carry around the entire life support unit of the family or group, snacks included, whilst women's fashion still lacks pockets. And fuck the argument, like what the heck, Johnny boy. That ruling sent Capri shares down by 47%, and that is just a shame. Idol then hopped on an investor and analyst call in November 2024 and said the following. Our issue is we have pricing that is out of line for what the customer's expectation is. They're being much more choiceful today than they were 2 years ago. Earlier in April this month, this year, we learn that Prada Group agreed to acquire Versace and expanding their Made in Italy presence. Initially, the price agreed was 1.43 billion euro. However, after whichever number of stock market roller coaster crashed during this worldwide measuring contest, they negotiated it down to 1.25 billion euro, which is about 1.38 billion US dollars. I've already said that Donatella will stay with the brand. However, April 1st marked her leaving the post of creative director she took over after her brother's Gianni's murder in 1997. This Page 6 article says, plans, it seems, were afoot to oust Donatella from her longtime role as the chief creative officer of Versace. The company founded by her brother Gianni after she clashed with John D. Idol, the company's chief executive, amid plummeting sales. Donatella is the only thing that drew anyone to Versace, said a New York-based fashion insider. They are trying to scapegoat her for the issues when anybody on the inside knows this came down to poor management. She went into this partnership with high hopes. She was doing what she thought best. She had no issue with the succession plan, but Capri execs had no respect for her as a human being, let alone as a Versace and as a visionary. She wanted to protect her family and her legacy. They didn't give a shit. Capri bought it for 2.1 billion US dollars in 2018. That's 3 billion reflecting inflation. Prada got it for less than a half. I mean, let's go. And that's the major side rant done. The last bit of this video, I just wanted to briefly touch on the topic we cover regularly on ad hoc basis here, and that's fashion musical chairs. There's also a short about it. The biggest news to me was Sabato Sarno leaving Gucci, and he's replaced by Demna Gvasalia, who's moving in from Balenciaga. I am team Vetements, if anyone asks. So for context, Vetements was founded by Demna and his brother Guram. They are now in estranged. There's drama. Another time. I'm thinking I'll just get something from Sabato's collections and well for the next round of fashion musical chairs. At Chanel, we've got Mathieu Blazy? Is it a French name? Who came over from Bottega Veneta and will show his first collection in October. Mathieu got Bottega so ridiculously famous. I am quite interested to see what's this new Chanel all about. And I think I was speculating that Galliano will get Chanel, and that is me being also wrong, but also not mad about it. Bottega Veneta hired Louise Trotter to do great things, no doubt there. She led a number of mid-range brands like Joseph, Lacoste, Carvan, so this is a great opportunity for her, very fitting her talent. Jonathan Anderson came over to Dior Homme from Loewe after 11 years there. That should be interesting, and we can check out his first show on 27th June. Jack McCulloch and Lazaro Hernandez, who founded and led Prensa Schooler, a brand named by putting together their mother's maiden names, succeeded Jonathan Anderson and moved into Loewe. I thought they were closing down Prensa Schooler, but apparently not. Maison Margiela is now under Glenn Martens' direction, who was previous creative director of Diesel. Fabulous Belgian streety avant-garde designer, love. Miguel Castro Freitas is succeeding Casey Cadwallader over at Mugler. Mugler, that's a French brand and I should learn to pronounce it properly, so Mugler. Over at Mugler, and he's coming over from Max Maris's Sport Max. He started his career at Dior under Galliano, but we'll try not to hold it against him. Dario Vitale goes to Versace from Miu Miu. Looks like Miu Miu is still looking for a new creative director, but also for a CEO if you like to apply. Michael Ryder is now at Celine as Heidi Slimane stepped down. He previously worked under Jesquier at Balenciaga and Phoebe Philo? I'm sorry. Celine. He left shortly after Phoebe left, and he has been at Polo Ralph Lauren since 2018. Simone Bellotti went to Gilles Sander from Bally. Bally recently went through a sale. They have a new CEO. It was probably a good time for change of scenery. Last but not least, Jean-Paul Gaultier, who had guest designers since he retired in 2020. They now get Duran Lanting as their permanent designer. Duran, who I think is so right for the brand. I'm almost excited to see his debut in September. And don't forget, Gaultier designs couture as well, so that's to come in January 2026. How very exciting. And there you have it. So to recap, World's in Flames, capitalism in fashion and fashion, music and change. I mean, forgive the side rant, but I thought it was kind of fun and interesting, so I'm not gonna leave you with any deep thoughts or questions, but if you want to leave a comment below, feel free to do so. I feel like people know what to do in 2025 with liking and subscribing, so I'll see you next time. Bye!